All right. Hello, everybody. Welcome back to another episode of The Market Close. It is Wednesday, December 31st. This is the last market close of 2025. We are ending out the year. Your boy was on time. To end out the year. Fortunately, it's ending out red. This is, we have not had, there's a couple of stats I looked at today. We have not had a red session like this over the past couple of years on the last trading session of a year. 2024 wasn't like amazing green on the last day, but I remember streaming the market close that day, and we definitely ended positive and green. Today, that's not going to happen unless something changes in 15 minutes. S&P 500 is actually down 0.5% on the day, which means everything goes down. NVIDIA, although this was up a lot more, this is why it looks like it's flat, but it's down from where it was in the morning at 189. Amazon down 0.5%, PayPal down 1%, SoFi down 1.2%, Duolingo down 1%, Ethereum 2960. You have Bitcoin right there at 87.2. This was at 89 in the morning. HIMS is down 2%. Grab is barely holding above $5. Palantir losing 180, down 1.7. Verizon obviously green on the day because it's Verizon. And this is a stock that would go up on a day like this. But Oracle's down 1%. VG's down 1%. Iren's down 2%. Bloom Energy down 1.2%. Nebius, I think, is at 83. Nebius is at 83.50, down 2%. I mean, it's not the ugliest day. We've been through worse days. Nike is up. Those insider buys getting the street excited. Wow, 60. Wow, 4%. If you bought at 58, you're up almost $6 a share. Not too bad. So maybe, oh, wow, it got to 56. Maybe 56 was the bottom on Nike. But, yeah, not the ugliest day in the world, just not the funnest day to end out the year. S&P, if we end at these levels, we were up 17% in the morning. I don't think it's changed that much. Year to date would be, 16.85. So, I mean, obviously it's not 7,000, and it's not what I think a lot of people wanted to see, but it's a hell of a year. And I know that doesn't feel that much better to say on a day where it goes red, but nonetheless, this is what we're looking at. So, yeah, Robinhood got hit as well. So, again, as soon as I saw those volumes yesterday on Hood and I saw the stock react, I had a feeling today was not going to be a fun day. 113, this hit 112 as well, down 2%. I think that's a function of two things. Number one, high beta sell-off today. You're seeing that across the board. Not aggressive high beta sell-off, but still it is a sell-off. Number two, their trading volumes just weren't the best. So maybe some analysts are taking down their expectations for December, which means the stock is compressing the multiple a little bit. But the biggest reason that every stock is down today, quite frankly, at least this is my theory about why every stock is down. BMNR down 3% right there. UNH down 0.5%. Uber down 0.5%. Rocket Lab loses 70, which can't complain too much about, but that one's down 1%. Tesla forfeit. Wow, Tesla losing 440, losing 450 would be wild, given this thing was 485 on Monday. The biggest reason is I think tax loss harvesting. I think it's tax loss harvesting. I know that's a very simple reason, but oops, sorry, that should be good. That's not an internet thing. That's just, I don't even know what that was. We should be good. But I was saying is I think it's tax loss harvesting. And I know that's a simple reason, but maybe there were a lot more losers that people had throughout the year that they were waiting to sell at the very end. Like maybe there was a lot of different stocks that people had that they were saying, let me wait until the very end because maybe it comes back because we're in a bull market, Santa Claus rally, yada, 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 all the bull arguments compounding on each other. And then boom, it just doesn't end up happening. And then so by the end of the year, which is now, you start thinking, all right, like, let me just get rid of it if it's not going to actually play out. I would love to know ideas that you guys have on why we kind of saw this sell-off to the aggressive level that we saw today. That's really the only reason I have. I mean, let me check on the volume. Hold on. S&P average volume is 75 million. What's our volume today? 51 million. So, wow, look at that, losing 683. Look at that red candle. That's like 20 minutes ago, 682.85. So more volume than we got yesterday, still below the average volume, but whatever volume's coming in across the board, it's just ugly volume. Ugly volume to the downside. It could be profit taking as well. The problem is, like, again, if you take profits right now, you're gonna have to pay taxes next year. But if you're selling against those profits, which could be the whole tax loss harvesting argument, then maybe people are okay with saying, hey, I'm going to sell on the day that I'm also tax loss harvesting and not wait 2 more days. And also, if people start getting a little panicked that what happens in 2 days is January going to be horrible, maybe they're trying to get their gains immediately. Although, again, like you can wait literally 1 day and have to avoid some of the taxes. But that could be something that's compounding today, and that's potentially getting people out of the market. So still, are we really upset that Google's at 312? No, this thing was stuck at 140 all year. The time to buy was 140, 150, 170, 200, 230. It's at 312. It's not at 320. Okay, who cares? Video 187. Oscar, this one hasn't been helped based on those subsidies. SoFi, again, lagging. Great year, though, up 80%, but just because it was not able to hold that 28, 29 level. Celsius up 60% for the year. It's down 1% of the day. Like, these are just not things I think you can be too upset about. But nonetheless, it does obviously suck for all of us to not see this massive level of green going into the end of the year. Yarsdale says, I sold out of Netflix for tax loss harvesting. Yeah, put on the chat if you sold anything today. If you took profits or if you tax loss harvested, and got about, we still have 10 minutes yet. We still have 9 minutes to Santa Claus rally. But let me know, because honestly, that's the only way I can explain it today. I don't really see anything that's too crazy. Also, final profit taking for people who realized losses back in April. That is also very fair. That makes a lot of sense why people are doing it. BM&R, I've heard a lot of people today taking profits on BM&R. Or sorry, not taking profits, but taking the tax loss harvest. I see a bunch of you guys saying that today as well. Yeah, I mean, look, it's ugly. But again, a day like this is exactly the reason why I hedged Hood, because it would be a lot uglier if I didn't, right? And so when you protect the downside, now Hood could recover to 120 next week, but I started hedging Hood at 124. So now at 113, you just don't feel that much of the pain as you would feel. And I think that's the question going into next year. It's like, if you are in something high beta that you have a lot of gains on, that you've been in for years, are you okay with seeing it potentially go down 30, 40% if that does happen? And the only reason I'm saying 30, 40% is because these names fell 20% when the S&P was down 5%. Every year you get a correction on average of about 10%. If that happens, I wonder if these names fall 30, 40, 50%. And that's the question going into next year. And you might have some of those fears creeping into the market right now, which is why these stocks are getting hit. Palantir down 1.8, VG down 2%, Bloom down 1%. Then Ren down 2.3% as well. Did you sell Misty? Yes, I sold that back in November. So not harvesting that today. And again, I'm not a tax expert, but remember, there are rules to harvesting. So if you sell your BM&R at a loss today, you cannot buy it for the next 30 days in order for it to qualify as an actual loss. Otherwise, it triggers a wash sale. Again, not a tax expert. You can ask ChatGPT. I don't think you need to really hire a tax expert. You probably should. But if you have a CPA, you can ask them questions. But ChatGPT really does a good job of breaking stuff down. And ChatGPT will also tell you they're not a tax expert, but they're probably better than your tax expert. But yeah, there are certain rules. So if BM&R starts going to the moon January 2nd, if you want that loss to qualify, you can't really buy it. So there's a bunch of those things that also are things to think about going into 2026. Does not apply to Roth. Yeah, see, those are important points. In your Roth, a lot of your Roth is tax-free. But again, there's nuances to it. So this is where you got to look that stuff up. But regardless, if people are in general taking some losses today, I think that's compounding the selling. Does anyone remember the last time? The last time I think the S&P was red on December 31st. Let's ask Gemini real quick. When was the last time that the S&P 500 closed down 0.05% or more on December 31st? I don't think it was last year. I think it was like 2018. 2021? It's looking like 2021. Or was it 2024? The S&P was down 2.5% on December 31st, 2024. I don't remember that. Really? That's what Gemini's saying. The last time the S&P closed down 0.5% or more on December 31st in 2024 when it fell. I do not remember the S&P. I think this is wrong. The S&P fell 2.5% on the last day of the year last year. Dude, I do not remember that. I'm going to ask the same question to ChatGPT, see if she says the same thing. That is weird. I mean, maybe it is, and I'm just having it a lack of memory on this, but it definitely, I think we feel it more today for some reason. Because I remember we did the market close last year. I don't remember feeling the red the way we're feeling it today. Yeah, bearish Google. Let's ask ChatGPT. Last December was brutal. Don't get me wrong, because we had a hawkish cut, and we kind of topped out early in December, then we came down. But I think we did have more of a rally than not towards the end of the year. This December, we just didn't get that. Core Read right there, 71. That's down 3.6% as well. Okay, so ChatGPT says so Gemini was wrong. ChatGPT says the S&P fell 0.4% last year on December 31st. Google said it fell freaking 2.5%. That would be ridiculous. We wouldn't have closed at 20% last year if that happened. Let me ask, when was the last time before 2024? But regardless, it's just been one of those years where it's been strong. You have to be a stock picker. You have to buy the dip at the right time to really get the benefit and the margin of safety of getting the benefit of buying the dip and having a cost basis that could withstand the volatility. Like if you bought the dip on Hood at 30, 40, 50, 60 at 113, you just can't be that upset. Nonetheless, if you bought a Hood at 140, you're probably upset, right? So it's the give and take of how the market operates. NVIDIA right there, 186.89, losing 187 on the day as well. Okay, I was right. 2018. 2018 on December 31st, market was down. Okay, I hope ChatGPT is not lying about this, but 6.24%. I think she's right about that. No, she's doing year to date. See, we need this is why we need Robinhood's Cortex shit. Like, we need an actual financial LLM. She's saying 2008 on December 31st, the market fell 30%. Like, it would not fall 30% in a day. For the year, it did. But I asked for the day. See, if Robinhood can fix this stuff, I think that's going to be very useful on the channel. Every day we can ask like historical questions and get good answers. It's always a she, dude. If you think your ChatGPT is a guy, you're crazy. It's always a she. It's absolutely a she. I've never thought of my LLM as a guy. I don't know what that says about me, but it's always a she. Then again, my stocks are always a she as well, because she drives you a little crazy, if you know what I'm talking about. So that's why it's a she. But no, I'm just kidding. But Tesla right there, that'll drive you crazy as well. 449. She's losing 450. She's losing 450. Oracle losing 196. Broadcom losing 350. Verizon's up. That's your Santa Claus rally. Verizon is green. There you go. Thank you, Santa Claus, for telecommunication services. Verizon is green. It is what it is. It is what it is. Hims down 2%. Grab's going to end the year below $5. Tesla. You can't be mad at Tesla below 450. No one can be mad about that. Like, still year to date, Tesla's up a lot. By the way, Sam's going to join in a little bit. We'll get his thoughts on the end of the year. Tesla's still up 18% for the year, just matching the S&P, slightly beating it. But obviously, it was close to 500 last week. Santa does wear red. That's true. Santa does wear red. 2015 on December 31st, the market was down 0.94%. Okay, so if you're right about that, the last time we had a negative 1% day, which it's not negative 1% today, but it feels like that. If that was 2015, yeah, it's down 0.7%. We round up, we're down 1%. If the last time that happened was 2015, then this is quite incredible. First time in 10 years, we're seeing a negative 1% day on December 31st. Santa's not real. I guess this year's Santa is not real. We have 30 seconds. All right, here we go. 30 seconds. Here we go. Wow, S&P losing 682. I guess Santa being dressed in red was the giveaway here to figure out if this was going to be a red or green day. It happens. It happens. But we got to be grateful. Still an incredible year. Not 20%, 16.8%. Can't be too upset about that. And obviously, if you took advantage of certain opportunities this year, then it ended up working out. All right, here we go. Thank you, everybody, for being here. December 31st, 4 p.m. This is the final market close of 2025. The stock market is now closed. All right, we are done for the year. We are done for the year. The S&P 500 officially ends the year at 681.87. Year to date on the S&P, 16.64% is what the 500 best companies in the country were able to do for 2025. This is your heat map for the day. Let me switch it to year to date. All right, there's your year to date. Apple, 9%. NVIDIA, is that right? 39%? Is that accurate? No, NVIDIA's at 35%. Okay, FinViz messing this up a little bit. So take it with a grain of salt, plus or minus 2-3%. But Apple 9%, Amazon 5%, Tesla 11%. Yeah, that's okay. We can't use this. This is dead wrong. Tesla's up 17%, not 11%. I'll find something else that gives us the year to dates, but that's just like dead wrong. 681 on the S&P 500. That's down 0.75. Google ends the year at 313. That was down 0.27%. CoreWeave down 3%. 7161. This one got hit from the IPO, but still up about 80% for the year. NVIDIA 186.50. Up 35% for the year, 0.55% down. PayPal down 1.2%. SoFi down 1.43%. SoFi ended, I think, above 70%. Year to date, 85%. Incredible year for SoFi. Cannot be too upset about that. Robinhood and Palantir. Let's do hoodie stock year to date. 186%. I think at the most, Hood was up 230, 240%. 113.10 is the ending price for Hood. And Palantir stock year to date is 136.4%. Palantir right there at 177.75, down about 1.7% on the day. CrowdStrike 468, that's down. You got Mercado Libre 2014, that's down 0.3%. You had silver, which I still think got hit today by 7%. Silver 8.81% down on silver after going up 6% yesterday, then after going down 10% on Monday. So silver took a bit of a beating. And then AMD, also an amazing name this year, ended at 214, but year to date, AMD 77%. You just cannot be too upset about those performances, even if this last Friday was not the most fun way for this to end. Google right there again at 313, and then NVIDIA at 186.50. All right, let's do year to dates. Let's do year to dates. This is our final year to date for 2025. My year to date, relatively the same as what I said in the Substack yesterday. 58.2 Substack. Yesterday was 61. I said it was 60. So rounded off to 60. 60% year to date. 58.2 if you want to be exact. But 60%. That is what we have. Again, October 9th, it was at all-time highs. Trigger holding around 199%. Obviously, I don't think anyone was ready for what happened on October 9th. Kind of shifted the entire market towards the end of the year. But you learn lessons from that. And that's the most you can do, especially as the portfolio grows, the portfolio compounds. It's a bit harder to get massive returns when you're working with a lot more capital. But it also means that when you do have those massive returns, maybe taking profits, hedging, all those things are definitely relevant. Most of us here are long-term investors, so these are the swings you have to deal with. If you're going to get massive returns with high beta names, you're going to get massive drawdowns with those high beta names. The question is, are you ready to hold those high beta names for the long term to be able to sustain those drawdowns? All right, what do we got? We got Fred at 73. We got Real Signet at 46. We got Kinkoi at 15. We got Vengta at 49. We got Logan at 44. We got Callum at 42. Dude, these are incredible. These are double and triple the S&P. Neural at 31. You got Michael at 54. You got McBurger at about 50. You've got It's Brian at 31. Shaka at 34.7. Aaron Bath at 360. L Dog at 103. Ori at 136. Incredible. Brancer at 52. Humeyi At 59, we got Cactus trolling with 3.14%. Cactus needs to eat some pie tonight for that. Tom at 38.8, investing with Jeremy at 138%. I mean, these are still pretty incredible numbers. I would say the average on October 9th was pushing like 80, 90%. I think the average today is probably pushing closer to 40 to 45%. These are still amazing. Ray at 118. Parzival 0 at 100.33. I was scared it would close below a clean double. There you go. You got the 100 for your year to date. Let me pull down these comments. Adrian at 75, Gaither at 50, Rinkish at 35, Boom at 42. I mean, dude, a lot of these numbers are absolutely incredible. And, compared to 2024 for me was 275%. Obviously, massive year. It's harder to keep compounding at those levels as the portfolio gets bigger. But that was a massive beat of the S&P 500. This year, seems like most of us are 3 to 4x the S&P 500. A decent chunk of you are 5 to 7x the S&P 500. I think there's just no reason to be upset here. Like zero reason to be upset with performance this year. I mean, I would say the majority of people here absolutely crushed it. And if anything, we're being a little greedy that it's not as good as it could have been. But that's life. You gotta take what you get. Irish at 36.8 and happy with all caps. I'm happy. You're happy. And, even though it's important to keep your feet grounded now that you're happy, even if you're not a penguin, it's important to remember you should still have happy feet. Sayin at 63, you got Riley at 23.1, Stock Dylan at 130.8. You got WLM at 129, Tomas at 123, Bert at 118. Chugu at 72%, Jesse at 65, Mark at 81. That is incredible. Absolutely freaking incredible. This is great. I don't like it. I mean, there's no reason for anyone to be upset. There's zero reason for anyone to be upset, unless you're upset at my happy feet joke. But I really thought on the spot to make that happen. I really did. And again, for anyone who's like lying about their year to date, there's nothing to gain from that. Like I've said this so many times. Like if you're capping in the chat and you have like a random profile and username and I read it out loud and I say Smarty Pants 45 is up 300% this year, and that's a lie. It's like that has zero impact on my life, on your life, on anyone's life, especially if you're not up 300%, because then you get the satisfaction of me saying John Jacob is up 87%. It's like, if that's not even real and John Jacob is not a thing and there's no 87%, like it's so, you could be capping if you want, but I would hope the majority of people are not literally saying a fake number for a random shout out of something that doesn't make sense. Smarty Pants is actually up 67%. Exactly. It's up 67%. Yeah, I'm surprised no one says 67%. But look, this is incredible, dude. This is incredible. I think everyone should be relatively happy. Again, for all the time that we dedicate to the markets, for all the time that we spend learning about the markets, understanding the markets, consuming market information, I think if you are beating the market, which is essentially 16.8%, then you did it. That is why it was worth it. And quite frankly, and here's the real kicker, and we'll look at the Qs and the diamonds and the small caps in a second. I want to see Cactus. Cactus, can you find a website that shows me the year to dates of everything? See if you can find a website or if there's like a Twitter post or something that shows the year to dates of everything, because that would be nice to just read through if you can find it. And see if maybe TradingView has it, and then I'll go to TradingView and I can see. But here's the big thing. Let's say you didn't beat the S&P 500 this year, or you kind of beat the S&P. Maybe you're like 22%, which you don't think is that good, as 16%. The key thing here is you might be saying, well, I spent so much time like watching Amit's streams and like listening to these podcasts and learning about investing, and all I did was beat the S&P by 4 or 5%. Therefore, I wasted my time. My way to flip that psychologically is, no, that's the process of becoming an investor. Like when I wanted to be a basketball player and I watched a lot of basketball, I ended up not becoming a professional basketball player. But during that time, I don't think that was wasted. When I learned about basketball, I watched basketball, I tried to understand basketball rules and like practice different basketball moves. All of that was in the process of trying to become a basketball player. I just didn't end up reaching the physical height that was needed to be a successful basketball player. And I cut my ends in my sophomore year and I pivoted.
The good thing about investing is it doesn't matter how tall you are. You don't have to ever stop. There's no physical talent there's nothing that is needed from a talent perspective other than the consistency and work ethic of trying to learn about the state of the concept of investing, the philosophies of investing, and the right practices to become an investor. And a lot of it, quite frankly, is the tuition you have to pay via the practice of losing in the market, which we all have to go through in some way or another, to be able to learn different lessons. And we all are going to consistently have to go through that for the rest of our lives, which is why this is the best game on earth. This is the best game on earth. Doesn't matter who you are, where you're from, what gender, race, none of it matters. All of this is a game around how to understand navigating the markets. And there's a billion different permutations of understanding that game. So the time you keep spending to learn that game, regardless of the outcome it produces in 1 or 2 years, it does not define you as an investor. Some years are good, some years are bad. The last couple of years have been more good than bad. And hopefully the rest of the years that we're investors are more good than bad. But overall, seems pretty damn good for this year. All right, well, that's what we got. That's what we got for the year. Let me see if I can get these year-to-dates. Oh, perfect. I think Cactus came in clutch for us. We got some of this. Oh, Cactus, bro, he sent me a lot of stuff. He sent me, okay, so let's do some analysis of 2025. We'll have Sam on in a little bit, and we'll get his thoughts for the year and see what he's thinking. So let me pull some of this stuff up, and then we'll keep going from there. Just admit your jumper was broke. Okay, I didn't have the best shot, but I was really good with my Euro step. And I had a decent 3. I didn't have a good jumper, but I had a decent 3-point shot, which I think there is a bit of a difference between the 3 and like a mid-range jumper. Dude, I told you guys a story, right? I had a really good practice in freshman year. Like I had the hustle, the tenacity, my coach, and then one day my coach came up to me after like 4 weeks of tryouts, and he was like, "Amit, how tall are your parents?" And I was like, "Why?" He was just like, "How tall?" I was like 5'5", 5'6", and he was like, that's when I knew I wasn't going to make it. Because you have to be like, you need that physical strength. Like, Michael Jordan didn't get his last 6 inches. He was like 6 feet. He ended up being 6'6" after his junior year of high school. And if he didn't get those final inches, I mean, he might have not have been the Michael Jordan that he is. Sometimes, but the stock market doesn't require that. You don't need to be Michael Jordan. You don't need to be 6'6". You just need to care about learning about the markets. All right, so we've got some stats right here in terms of what we're looking at. So silver and gold ended up winning year to date. Silver 183%, gold 150%. Uranium was at 78. This is just looking at not individual stocks, but all asset classes. Semiconductors were up 40% for the year. REITs were up 32%. Tobacco stocks were up 32%. Biotech, XBI, made a hell of a comeback this year. That was up 28% after basically being dead for the past 5 years. That's also what helped IWM. Airlines were up 21%. Software was up 16%. SaaS ended up not actually being as strong. Entertainment was up 12%. Casinos was up 11%. Those underperformed. Apparel, retail was up 10.5%, although in Q3, a lot of those companies had much better earnings. Oil and gas was up 5%. Makes sense because oil prices have been depressed, which is a good thing for inflation. Good thing for gas prices for consumers, not necessarily the best thing for those stocks. Gambling stocks down 9%. This is your DraftKings, your FanDuels, etc. Restaurants down 8%. Residential REITs down 9%. Home improvement retail down 10%. And then you have packaging and containers down about 12% as well. That's some of what we got for the end of the year. Let's pull up some individual stocks as well and see what we have. And we'll keep going from there. So let me see if I can pull this up here. Okay, cool. This one is relatively more accurate than FinWiz. But here we go. Google, 64%. Again, this might be off 1 or 2%, but this should be relatively the same. Amazon, 4%. Tesla, 15%. Microsoft, 13%. Meta, 12%. Broadcom, 46%. NVIDIA, 37%. Apple at 9%. We also have after hours, so technically the after hours is going to be the final explanation of this. JPM 33%, Berkshire 10%, Visa 10%, Walmart 23%. Wow, Walmart outperformed Amazon, Meta, and Oracle. Oracle's up 15%. Salesforce down 21%, Accenture down 23%, ServiceNow down 28%, Adobe down 21%, AppLovin was up, is this correct, 103%? I think that's right. AppLovin 97%. Okay, so Google Finance a little bit different, but 97%. Yeah, you're right. Gold is 64. Sorry, that's actually incorrect. Gold is 64. Why did it say gold is up 150%? Even Finwiz got it wrong. Why is it? I'm looking at their website. Gold, they're saying performance year to date 150. That's wrong. Unless they're tracking. They're tracking a bunch of tickers inside of it, including the gold miners. Okay, so that's why they kind of made their own mini ETF. But yes, gold was up 64% this year. Still beat a lot of the rest of the market. Caterpillar. I talk about something that's really important for industrials. That was up 56%, especially for data centers. Lam Research up 135, AbbVie up 27, Disney was up 1, McDonald's was up 5, PG&E that was down 14, or sorry, Procter & Gamble that was down 14, Coca-Cola was up 12%. You still got 12% of that Coca-Cola. Netflix was seen as the recession hedge in the beginning of the year. That stock ended up 5%. Up 5%. On the year. Micron 235, Charles Schwab, that's still a great year for Schwab, 30%, AMD 75, GE Vernova 183. Intuit was up 4, Home Depot was down 12. That's why we saw some of the, wow, I didn't know Home Depot was down 12. That's why we saw the retail stocks in the home space as an aggregate bucket go down. TJX was up 26, Lowe's was down 2.8. So Walmart was the only big box retailer that actually had a great year, basically closed at all-time highs. And then Costco as well was down 5% for the year. Goldman Sachs crushed it up 51, MasterCard up 7, Bank of America up 24, Wells Fargo up 32, Morgan Stanley up 40, Visa up 10. Let's look at the stock draft for the end of the year. Again, this ends in June of 2026, but so far in the last 6 months, I ended 24.5. Duolingo was the biggest stain, down 63. Matt's at 30. He's in first place. Chris is at 6. Tanner's at 17.29. And then Steve is at 2.2 for the first 6 months of, or the last 6 months of 2025. Platinum's up 122% for the year. How did Nebius do? That's a good question. Nebius year to date, 174%. 174%. GE Vernova, that was up 96%. And Deere was also up 9% as well. I don't believe selling after hours counts in your tax loss harvesting. I could be dead wrong on that, but I'm pretty sure it's market hours. So yeah, you kind of had to do it before the market closed, but I might be wrong on that. But we still do have after hours to see what happened. Mitt, what's your year-to-date? 60%. And I said that yesterday in the draft as well. Which we should pull up. We should go through that article as well. But in the, not the draft, in the Substack, 60% to end out the year for 2025. And I'll pull this up, which is kind of matching what I see a lot of people. I mean, the average I see in the chat is 45 to 55. You got definitely a bunch of people in that 80, 90 range. Bunch of people in the triple digits. I think it was a lot more in the 80 to triple digits in October. Obviously, we've seen what's happened since then. But I mean, I think the majority of us 3Xing the S&P 500. Nate said, I just wanted to hear you say it. Oh, my God. Nebius is the reason I outperformed, to be honest, even though I should be re-rated higher because it's obviously not the same company as before the 22 billion of contracts. Yeah, that's the other thing. Like if you're in a name like a Nebius, let's say, a lot of people were in Nebius and that, when it was at 140, they were probably crushing their year to date. 140 to 80 hurts, just like Hood from 150 to 110 hurts, even though, you're still up. You're just not up as much, which is why it's hard to compound every year. You got 12 months of the year. You got to survive every single month in this game. But next year, if Hood re-rates quickly, if Nebius re-rates quickly, which we'll see what happens going through that year to date for the next year could change dramatically because now it's starting from a smaller base. And technically, it's less pressure to start from a Nebius at 140, a Hood from 150, and NVIDIA at 210 because you're starting 10 to 15% lower on all those names, which I think makes a lot of sense. Job V, thank you for the $50 super chat. Thanks, Amit. I'm up 26% my first year. Thanks, dude. I barely had any extra money to do with it, so I didn't make much, but I learned a lot. Job V, thank you for the $50 super chat. You did not need to send that super chat, but thank you for being here. 26% is incredible. That's beating the S&P by about 10%. And for your first year of my first year of investing was down 97%. So it's like my first real year in 2020. Like, think about that. 2020 is the greatest bull market in history. The Fed's printing money like there's no tomorrow, and I'm down. I basically blew up my portfolio. I knew nothing. I had no idea what I was doing. And so you go through that shit. You go through it, and if you're able to withstand that stuff and survive, then that's what matters. That is what matters. Duns, thank you for the super chat. 26% year to date. Didn't add for 6 months due to unemployment. Thanks, Smith, for 2025. Both you and the community are amazing. Happy New Year, all. Stay safe. Duns, Happy New Year to you. Thank you for being here. Congrats on the 26% year to date. And thank you for being here every single day as part of the community. BCAP, thank you for the $6.70 super chat. Surprised none of you guys did a $6.70 super chat yet. I'm happy we're ending out 2025 with at least one of those. You're the man, Amit. Thanks for a great year. I learned so much from you, and we'll continue to learn from you. Thank you so much. BKP, thank you for being here. And thank you as well for that 6-7 super chat. Because I deeply, deeply appreciate that as well. All right, folks. So that is the performance year to date. Before we bring Sam on, I want to read a couple things that Cactus sent me. These are a couple of like awards or a couple of things you could claim as potential awards. So best performing S&P 500 stock was SanDisk. We talked about that yesterday. That was part of the, what do you call it? That was part of the giveaway that we did. And I believe most people should have got their award yet. If you didn't, email me, but I think pretty much everyone got it last night. Biggest plot twist, he has Intel, which makes sense. Intel up 84% year to date. NVIDIA closed a $5 billion deal. The Trump administration invested $4 billion. So that was a big turnaround. Comeback of the year, he has Robinhood. Dead app narratives got smoked. It ripped 200% in 2025. Technically, you could say that was a comeback after April, but the thing is, a lot of names were comebacks after April. The entire market was a comeback after April. So that is fair. Villain Candle Award, the day that traumatized charts. He has DeepSeek, as that took NVIDIA down 40% over the coming weeks. Bag Holder Hall of Fame. These are actually good ideas, Cactus. I'm going to give this to Steve today, and he'll give me his answers for these. We both probably have different answers. He has SMCI. I think we know what takes Bag Holder Hall of Fame of the year. I don't even think I need to say it, but I think we know. And then finally, he has CEO of the Year with Jensen Huang. CEO of the Year with Jensen Huang NVIDIA. Comeback of the year could definitely go to AMD, 100%. That thing was in the gutter for a while, and then you had that OpenAI deal. Lisa Su did what she had to do. She delivered shareholder returns, and she made it happen. She absolutely made it happen. All right, let's bring on a guest on the show, get their thoughts on this end of year lack of Santa Claus rally, but overall thoughts on the year, and their thoughts on the broader market as well. Ladies and gentlemen, Mr. Sam Solid. You are muted, sir.
I am muted. I always make that mistake all the time.
You learn from
Happy
Chris.
New Year,
He makes
sir.
that mistake every time.
I always make that mistake all the time. Yeah, Chris does too. Chris too. Was that SMCI hit to Chris, by the way?
I don't know. Cactus sent me a bunch of these random things. Maybe it's SMCI got caught with a lot of people.
Listen, I think we've 2005 obviously was not a perfect year for a lot of people. April was not a great time. We obviously came out in the positive side at the end of that, but I mean, I'll be honest, dude. Back in 2017, I think I blew up like a trading account or something. Like that was like when I started trading. And 2018, I actually broke even. So second year of trading, breaking even is like not exactly the best. I mean, breaking even on your second full year of trading is like, you know, that's good enough. But I mean, we all learn the hard things in 2025. I mean, I know some people like they have not performed well this year, and it's very difficult to not perform well on 3 back-to-back double-digit years. But we'll see, man. We'll see. We'll see.
So, first of all, Happy New Year to you. I hope you enjoy it with your family and your friends.
Yep.
I agree with a lot of what you said. I guess we'll get started into just your thoughts of 2025. Obviously, choppy, volatile. How do you think the year went, and are you happy with your overall performance and how you navigated the year?
Yeah, the performance was pretty good. I wish I pretty much just closed everything out on October 10 or hours before the Trump China tantrum on October 10, because that's when I was doing phenomenally in the year. Came back a bit, but gave some back probably in the last couple of weeks. But I would say, I mean, I've outperformed the market this year. I'm up, but I haven't calculated exactly. It's like 70, 80%. So pretty good this year. And a lot of that really had to do with a lot of Amazon, a lot of on semiconductor toward the end of the year. A lot of Nebius, Robinhood, and Robinhood is up phenomenally this year.
Yeah.
And a lot of that was options trading. And I think for 2026, I want to focus less on the options because it's a lot of volatility, man. I mean, even like a lot of this stuff like Nebius and everything like that kind of volatility is pretty wild.
But that volatility is also what contributed to those gains.
It is well, right? The options and the swing trading that I did actually were the main contributors for the gains, and a lot of it was given back because of Iron and Nebius getting slashed in half. I mean, like, I think a lot of people really suffered in that, and to be honest, I don't know what 2026 is going to be like for those stocks because they just are not getting any volume or momentum in like the last couple of weeks. But as far as the market goes, I feel like the 40% intra-year swing that we've seen, I think that's basically a norm, right? I think we have to get used to these volatility up movements in the up and down direction. Like, I don't think it's gonna go away. I mean, we're adding more algos, we're adding basically news being driven instantaneously through social media. We're adding a lot more influence to multiple crowds of the market. Retail is starting to have a lot more strength in terms of moving the market as well, even from a sentiment and fundamental perspective. I think that we have to get used to this sort of thing. Like, I could honestly see like a 10 to 20% down at some point next year and then back up maybe double digits. We'll see. And Tom Lee is saying like 7,700. So that's like what, 11% up from here, which is pretty good for the year.
The volatility that we experienced and the way that volatility happened, I think the defining factor of this year, by the way, I thought this was also hilarious. MicroStrategy has this chart on their website comparing them to everybody else. And this is actually on their website. Unfortunately, they have to show that they're down 47% over the past year and everything else is up. But gold, which is up there as well, which is crazy. But do you think the year really started in April? Like, that's what defined the year. The first 4 months before that were irrelevant. You either bought the dip in April or you didn't, basically.
So I was up like 22% in February, and I think you posted that too, that you were also up 22% as well. And it was just a slow bleed. Like, I still remember like those last days in March and the beginning of April. It was like down 2-3% every single day in my portfolio.
Yeah.
Like, it was brutal during those days. I mean, as a growth stock investor, like, those days were just brutal. And it's basically been up and to the right since then. I think obviously the market opened at the beginning of the year, and I do think the market does a bit of a reset at the beginning of the year. I think that the way that the performance happens in the stock market, especially with fund managers, is that when the end of the year happens, they completely reset, right? And the fact that allocation changes very dramatically for a lot of large fund managers, I think it's kind of irrelevant what happened the previous year, right? And really, price drives up. There's always a buyer for every seller. Like, there's never more buyers than sellers, but it drives up because the buyers are more aggressive than the sellers. And I think that it's possible to see another double-digit year. Like, there's nothing that says we can't have that, right? I mean, you have the market cap, of course, but when you have people who are buying, paying a much more aggressive price or taking out the ask or whatever it is, constantly over and over and over again with these news-driven catalysts, it could propel the market even higher than some ridiculous valuations that could last for some time.
What is your gut feeling today? And obviously you're allowed to change your mind, but Like, do you think 2026 is an ugly year, a choppy year, a bullish year?
If this is what we saw, if we're going to see something similar to what we see in 2026 as we did in 2025 with the 40% intra-year move, um, I'm ready for it. I'm ready for that happening. Like I mentioned, options really took a toll on my account February into April. And yeah, it took the other way around, but I would have been good only being up 10% in February and only down 10% in April. Like, I feel like that kind of volatility for me is just, it's not fun to deal with, right? And also concentration more. Like, I feel like if I'm concentrated more in like 10 holdings versus the 25 that I started out in the beginning of the year, then it probably would have been much more smooth. I would only focus on buying dips in certain stocks or whatever, and I would have to forego certain small wins and everything. But I think the bigger wins would have been a lot more amplified. Like, Nebius was only 3% of my portfolio starting out. I wish I had sized that more. Like, I wish it was like, looking back on it, it's like, man, she just made that like 10% of the portfolio. Like, the floor was so high in that stock at the time when it was in the $20 range that obviously in hindsight, I wish I did, but like, I got to look at that. I got to look at stocks that I want to be positioned for in 2026. And I've been concentrating more size in those positions, right? When it comes to the self-managed portfolio. Like, obviously, like I have a lot of SP5, I have a lot of SPY or VOO, I have a lot of VGT and stuff. But like, when I'm talking about the managed portfolio, like, I am concentrated pretty heavily in certain names.
Yeah, I think that is very, very fair. And I think that concentration also really does matter when it comes to kind of understanding how the year could play out. And look, it's a question of the capital and the size of the capital you're working with. So someone asked me, how did your family do year to date? I'm just looking at it right now. My dad, 111%, my mom, 267%, and my sister, 144%. Now, again, those numbers destroy my 60%, but they're working off a smaller base. And I think, Sam, you've been investing for a while. When the base gets bigger, it's just tougher because you're managing so much shit that can go back and forth.
Yeah, no, for sure. I mean, like, if someone's managing like a $20,000 portfolio, I don't want to say it's easy, but it's much easier on a psychological standpoint to basically double that in a matter of a year versus 100%. Like doubling like a multi-million-dollar portfolio. Because I don't care who you are. Well, I mean, maybe it depends for certain people, but like for people who increase their size of their portfolio very quickly, your psychology is still attached to the size that it was previously, right? Like for me, it's like if my portfolio moves like 10 grand in one day, like I'm like, oh, I've been just like, man, that sucks, right? Yeah. But if you really think about it, if my portfolio would have moved like $100 in like one day, in fact, I mean, like the way that things are, like, $100 is like a couple of ticks in a day or whatever it is. But if a portfolio would have moved that much, like I wouldn't really care. Like I want to get to the level where maybe a $10,000 move in a day or even like a $50,000 move in a day is like not such a big deal in the scheme of things. But at the same time, I don't, honestly, would you want to shoot for like another 60% year?
No, so I talked about, and we'll get into the Substack right now. I talked about that yesterday in the article, which is that like next year is a totally different year for me life-wise. Like there's a lot of other things I want to focus on other than being obsessed with the markets, but it's hard because I'm streaming about the markets 8 hours a day and I genuinely love the markets, but I'm also getting older and I also want to have a life just outside of the market. So if the S&P goes down 5%, I cannot be like, oh my goodness, like I'm down 20%, because that's what's going to happen when you're so concentrated in high beta when the S&P takes a hit. So I think there's a lot of different psychological ways to think about it. But if you can go up another 60, 70% year after year after year, like the Chris Camillos of the world, which are just so dedicated to taking on massive risk because that's how he has defined his investing apparatus, then that becomes an entirely different question. For the people asking what drove that performance for my family, so for my mom and dad, it was Hood, like exclusively. For my sister, it was Hood and Palantir. They all had other little random things here and there, but for my mom and dad, Hood is really what got the job done. My dad has some more NVIDIA than my mom. For my sister, it realistically was Hood and Palantir together because she actually bought Palantir at 20, whereas my parents didn't really get into Palantir that early. So speaking about positions, so again, this is what I outlined in the Substack. I'll link it right here. People can read it on their time. But here are my 13 positions going into next year. Max 7, Amazon, Meta, Nvidia, FinTech, Hood and SoFi, AI, Palantir, Tesla, SaaS, Zeta, which I know you're a fan of, we'll talk about, Space, Rocket Lab, Crypto, BMNR, Data Center, Semis, Nebius, and Amcor, and International is Grab. I know you said you like to keep about 10 positions. Give me your thoughts. I don't know if you fully solidified what 10 you're going with, and I'm sure it's changing all the time, but what are kind of the themes you're playing to propel in 2026?
I mean, I think it's very similar to what you have right there. Hood is already a big size portfolio. Actually, when I'm like trying to think about it, yeah, no, I'm not really long any fintech like new positions in size, right? I think Hood is probably like one of my that's like basically one of my only fintech positions if you exclude Mercado Libre, which Mercado Pago. I'm very bullish emerging markets going to next year, and I think I'm expressing that through Grab in addition to Mercado Libre, right? I've pretty much like sized down Nubank pretty considerably so I can allocate more to Mercado Libre because Nubank has run so much lately. My Nubank price target for 2027 is actually hit already this year, right? So when that happens, like I have to kind of, I don't want to say it's cutting the flowers, the water, the weeds, or whatever it is, because in this perspective, like the weeds are the weeds really Mercado Libre. So I had to justify that cut in order to have more exposure in e-commerce, which I'm also getting through Amazon. Meta, I think, is a great mean reversion play, but I don't think Meta is going to be like $5 trillion or anything. So I have to be a little bit realistic with how I'm going to size that one. Amazon, I don't think I will ever sell that company. Like that's one of the best companies. That is the best company in the entire world, in my opinion. I'm sized pretty heavy in Zeta. Zeta is, I don't know, it's down like 2%, 3% today, so it's no longer 10% of my portfolio, but it's probably more realistically like 9%, maybe 8.5%. I haven't checked, but probably like 10% of that position is in options, right? So I'm not experiencing massive volatility when Zeta makes a big move, and it's already a high beta stock. Probably about 5 to 6% of my portfolio is in Path, and that's more of a mean reversion play because I think the thing is going to be like $50 by next year. Probably over 10% of my portfolio is on semiconductor. I've already talked about that a lot. That's going to be that's a core position. I don't think I will sell that for a while. In fact, I think it's probably going to go to $100 by the end of the decade. And if that does happen, that'll be really great because I think 30% of that is in options. So Path, like 10% is in options, right? Amazon, all shares, Meta, all shares, Mercado Libre, good Lord, all shares. I got to bring up my spreadsheet real quick here because I think I have Adobe. I have a position in Adobe. It's not a massive position, but I think there's a bit of a mean reversion play on there. So like most of my stuff is like a medium to long-term swing that I have right now. And the rest of it is just basically core positions. I know I'm missing a big one. I mean, Grab obviously is on there.
Oh yeah, Grab. I forgot you're in that one. By the way, for those asking, what about VG? Honestly, after I published it last night, I forgot. I realized I forgot. VG is just so small, and like I don't care about it because I bought it just because Matt likes it. So I didn't really think it was a position, but yes, VG is.
Oh God, Amcor. Amcor is. I don't know how I forgot that one. Amcor is a pretty big position. That's mostly through appreciation as well, though. Robinhood obviously is an already big position. That one in Master, pretty good size, and I've been trimming a little bit at that lately.
Rubrik,
not a whole lot. Yeah, I have a position. I have a big position in Rubrik, mostly in shares. I probably should have waited to add it to that one again recently, but little do we know, it's back at the 200-day moving average. Nebius, of course, IREN, and ENS. Wow, that's a lot more positions than I expected.
Hold on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. No, I have 13. You have 14. Technically, I have 14 with VG, so we both have the same.
See, the thing is that IREN has fallen down so hard that like some of these positions have become smaller because of that reason. Like I was on cloud 9 with IREN and I totally got slaughtered in that one. And someone said Skywater. That's something I'm looking forward to. Hopefully building a thesis on, and I'm looking more into Skywater. I haven't gotten in yet. I don't know. I'm trying to wait for Skywater because it's a little bit more on the speculative side, but it does have that onshoring theme and everything. And I got to kind of figure that out because technically speaking, if I am going to go in Skywater, that would be like my third to fourth onshoring theme that Stock Talk's been talking about. I don't have MU. All right. I lost money in the MU
don't
short.
know what
right?
happened with MU.
Yeah. And I closed it. I closed it the next day. I'm not going to hold that thing. Like we all mess up. But I used to have MU, but that was a swing position earlier in the year. Crypto. I mean, yeah. See, I'm not going to put VU in here. I'm not going to put VGT in here. I'm not going to put MSCI or I'm not going to put that stuff in here. Like I don't really consider that as like self-managed or anything. That's something I just always allocate to and everything. But yeah, I mean, those are the main, and I also have crypto too. But again, like I'm not trying to trade crypto. Like these are like very concentrated positions that I have. And if we go from top to bottom, Amazon's going to be the largest. Mercado Libre and Rubrik are like one of the largest ones in there. But I would say like 5 or 6 of these is like 10% plus, and then the rest of them is like 3 to 4% or even less.
So what is your philosophy next year? Because I had a variety of different perspectives in the article last night to think about it, but I've spent the past 3 years in high beta, and I've loved it because it's been a thrill. It's been exhilarating. It's been an exciting journey. It's been heavily concentrated, so you're only focused on a couple things, and you're like just deeply following it. But now it feels like those valuations in 22 are not the same in 2026, and there's a lot more things to navigate. So what is the goal with your, outside of just growing it, because we all want to grow, what is your goal next year?
So, I mean, I'm adding a lot of money to my portfolio every single month. So it's not such a big deal to me in terms, like, I'm not trying to build like a massive nest egg of companies that I want to invest in for long. Like, I'm not trying to be a Warren Buffett. All right. Like, I'm not really a buy and hold person because I always find like new ideas. I look at the market every day. I see what's working, see what's not working.
And that's okay. By the way, it's okay to not be buy and hold. It is totally fine to be in and out.
I tried to do that in 2023, and I feel like it really held back my performance. And 2024 was a lot better in terms of performance, but I still feel like I missed out on a lot in 2024. This year, I kind of switched up my strategy in the last probably June-ish, and then I fully transitioned to my strategy this time where it's like, look, I like the themes that I invest in. I don't mind about the beta because I'm pretty confident that if the market were to drop, that I would know when to throw on the hedges and then chill out and like not throw more money at stocks, right? Like I feel like that's the mistake that I made February to April, was that I was like trying to call the bottom. I was blindly buying the dip sometimes. I was adding on leverage on times when I shouldn't have added leverage. And I was literally trying to navigate my way out of a storm from February to April when I should have just stayed put and not did anything, which is what Stock Talk did. And I've been looking at strategy closely, and I also have a few people who mentor me as well, kind of see what they're doing. It's like, look, when those situations happen, it's a lot less stressful to not try to time the bottom and do more planning ahead of what you will do when things recover, right? So I pulled off that show in October. And yes, a lot of the volatility in my portfolio was mainly through those high beta stocks, but I was able to navigate a good portion of that and reduce a lot of drawdown by hedging. And it's done pretty well. Like, in fact, I think I was able to reduce my drawdown by an additional 10 or 15% just by hedging. And no one says the market should have not went down further in late November. It could have. And if it did, I would have been totally prepared. And when it didn't, I cut those hedges out, right? So,
dude, if the market ended in late November when shit was hitting the fan, I mean, we all would be still singing a different tune, which is why I'm like really on this gratitude theme. Because if that was the performance end of November, I mean, I don't know if a lot of us are being the S&P, quite frankly, because we're also into high beta. Those got destroyed when the S&P was down 5%.
Yeah. I do think that 2026 is a year of value and companies that are actually profitable and not like pre-revenue companies, not companies that are like burning cash left and right. You know, there's an exception to certain companies that are part of a mega and secular theme, right? You have Rocket Lab, part of that theme, which obviously is not a profitable company, but they have prospects to get there and probably has like one of the most backing as far as defense contracts and everything. Like, pretty sure Rocket Lab is going to be well as a company in 5-10 years, right? So like something like that would do well. But like with companies, and I'm not trying to shoot myself in the foot because I do own the position, is that like, look, it was great with Iron, Nebius, and all these miners back in September and October, and I would have thought so too, but like the market speaks volumes, right? It is very concerned about the enormous amount of debt that these companies are taking out to build these data centers. And I'm not backing away in that theme. I'm just positioning myself concentrated wise in companies that I know will survive any type of catastrophe that might happen if it comes to this. Like, guys, this whole financial stuff that's happening, it's not what's it called? It's not a conspiracy. This is very real. There's a reason why Oracle is down here because the bond market is looking at its debt and it's like, we don't want to buy this. We want to hedge our bets and insure ourselves by buying these credit swaps or CDSs on Oracle debt, right? Like, that's a very weird thing to happen. That's a very crazy thing to happen. And I'm okay if I don't catch some crazy turnaround play in IRN and Nebius. I'll just keep what I have, right? Like, okay, IRN can go back to $100. It can, right? And if that happens, okay, 1.5-2% position becomes like a 6% position, right? But I could have like went all in right now and made so much money. It's like, but how do you know that? Like, I'll wait and see what happens, and then maybe I'll trade it when it does happen. But until then, I'm not going to sit here banking on that momentum to come if it's not even there.
Let me ask you this question. October 9th, when everyone started going on Zillow to do a little bit of window shopping, what do you think is the lesson learned from that moment? Because for me, it's, quite obvious, which in hindsight feels obvious, that if it feels too good, and it's felt good all year, but that which is why it's so hard to time this stuff. But if it feels that good, like I rent at 80, maybe time to trim. Like, is there any takeaway for you on how you could have better managed that time for you as well?
I was riding high, just like everyone else when that happened. I was like, there was not a single cell in my body that said, like, maybe I should cut IRAD in half, or maybe I should cut Nebius in half. Like, there was not a single cell in my body. And I think that was the mistake that I made, was that, look, we have to be pretty real with some of these valuations. And we have to take a look at what sentiment is out there. And we all got smacked in the face with that in October 10. And we were so high on that sentiment that even the weeks after that, we did not get the hint, right? Yeah. Like, I think that we're all going to make mistakes, right? That was the mistake that I made. I should have like chilled after that, whatever. But like, I'll be honest, I made some stupid swing positions like around that time too, which has hit the portfolio a little bit as well. But I mean, I think it's a learning game. Like, I feel like this is supposed to be a marathon, right? Like, is it going to be like, well, that's it, guys, I give up, that sort of thing? Or is it going to be like, I'm going to keep doing the same thing I'm doing all the time, no matter what? Like, the market changes, and so should we.
I agree. Do you have any fears of gold and silver doing what they do for next year? Are they warning us that things are going to happen badly for the market?
This is the thing I was doing on the stream yesterday, was that the move in gold and silver is like eerily similar to the beginning of 2021. And we know what happened in 2021. And the market went up like 20-25%, and then it topped out at the end of the year. So like, if I were to look at that pattern, it'd be like, well, we have another year left, another year and a half left, right?
Yeah.
But I don't think silver has topped. But maybe that's just me. I mean, obviously the market's not telling me otherwise today, but it doesn't look like silver's topping, in my opinion. It looks like it's just going to consolidate, and it looks like it wants to go higher, in my opinion. And gold looks like it kind of wants to go higher, but gold has a historical performance of consolidating after these massive moves for like years on end, right? Or maybe even months at least. And gold did chill for a little bit. Remember when gold went to like 3,300?
Yeah.
And it chilled for like 3 months, and everyone's like, oh, time to go back to growth stocks, whatever, right? And then gold just rallies out of nowhere to 4,500. Like, that stuff can happen. I mean, we're talking about a $33 trillion asset, right? It can happen. Like, silver, I don't know what silver is, but I think it's more expensive than NVIDIA now, right? Or at least close to it. I think I actually gave that crown back to NVIDIA.
Yeah, it was briefly for 20 minutes above NVIDIA in market cap. No, I agree. It is very confusing. I also agree with you that I don't know if it's topped, but to have the audacity to say it's topping, like, there's a lot of structural factors that are going on here that might be a bit different. Sam's Twitter right there in the chat. Everyone can make sure to follow Sam if you are not following Sam on Twitter. Sam, what do you think about AI next year? Do you think the party keeps going on and data center growth, GPU growth, all that is strong?
I mean, I think this theme is here to stay, at least until 2030. Like, there's some crazy forecasts that we're seeing from a lot of energy company or energy institutions, obviously from like the biggest financial institutions in the world and all this research we're seeing from multiple sources, right? It doesn't look like it's stopping anytime soon. The only thing is that there's a difference between what the data is telling us and what the market's telling us, right? And the market is forward looking, but I don't think the market is as forward looking as people think. I think it looks max like 3 to 4 weeks ahead of time, even less than that, in my opinion, because it's just looking at the volatility of the stock market. But the data out there says is that energy is supposed to grow by 25% by 2030, right? And what is the momentum of this coming from? Like it looks like we basically have been like somewhat stagnant for the last 15 years. I actually had a post on it. I think I posted it. It's like a couple of posts ago or something. Actually, I think it was my last post, but this is an energy institution that posted this. This isn't like I don't want to say Wall Street Journal, but this isn't like Nvidia that posted this, or this isn't like some energy company that posted it. Like this is an institution that does a lot of research on it, that provides these numbers, whatever. And like this isn't the only place I've seen it. This is the one that gave it best visually. But if you look over there, we've basically been stagnant as far as energy consumption for the last like 15 years. I think a lot of that has to do with efficiency, right? With just being able to transition more to EVs, being able to transition more to clean energy. Our products have gotten a lot better, so the products have become more efficient in terms of the amount of energy they're consuming. But then you see this huge hike up, and I don't think it's because efficiency went out the window. I think it's the amount of volume is ticking up very quickly, a lot from the data centers and a lot from the expansion of electronic appliances, vehicles, and so on. This is how much more demanding it is. But I also think emerging markets is also large contributors to this. So if they're forecasting this all the way to 2050, does that look like the market wants a top?
Yeah. You're basically
on
saying
a secular trend.
On a secular trend, 100% on a
Yeah.
secular trend, that level of AI momentum that is impacting so many different verticals, including energy and the utilities, which is very, very important. It's hard to say that's topping. So the like level of volatility for whatever reason, it's probably going to be there next year. But to say it's a structural, like the structural top in 2021 was everyone overhired because of COVID. We obviously were inflated like crazy because of low rates. And we printed $10 trillion in 7 months. Those were your structural reasons for why we got a top in 2022. It doesn't feel like that's the same unless there's something we're not paying attention to going into 2026.
I mean, it's very simple. And I think this is the same saying that we've heard many times, that you don't fight the Fed, right? If we were heading in toward a tightening cycle or a rate hike cycle, I would be a little worried, right? But we are not even close to one. In fact, I think they're heading toward a place where they don't have to move rates for years, right? We're very used to seeing rates go up and down very quickly in a matter of a few meetings, whatever. But look, they're trying to find homeostasis, right? They're trying to find a place where they can keep rates at. And I'm pretty sure 2.5 to 3% is their target. And once we get there, it doesn't mean like, all right, guys, time to go back up, right? Like the pendulum swings very far in one way, swings back the other, but eventually the pendulum finds the center, right? And I think that's where we're trying to head. And I think we actually might get close to there. The question is all these external factors around the entire world, where Japan is actually hiking rates now. And then you have these other countries in Latin America that are looking to start hiking rates because inflation is somewhat creeping back in there. These are going to kind of make the pendulum swing a little bit back and forth, but we are not going to get 0% interest rates ever again. Yeah. And I think that if we do, it's probably not going to be as bullish as it was before. It's probably something very bad.
Crypto, are you scared of it next year?
No, not really. I don't think crypto is going to go to like down another 30% or whatever. I mean, I don't know. Your guess is as good as mine when it comes to this, but I think crypto is already taking a 40% haircut. And while the market is at all-time highs, I don't think it's possible for crypto to go down further without bringing the market down with it. So, if the market goes down 10% from here, like all bets are off. Crypto is probably going to go down too. But there was an instance where that didn't happen. That was the SVB banking crisis, 2023. When that went under, you saw Bitcoin go up $10,000, and the market went down 5-6%. So like that sort of weird phenomenon can happen. I just don't think from a monetary standpoint that that's even possible again for something like that to happen. Or if it does, we're just never going to know about it.
I agree with you. I agree with Melanie as well. Sam makes solid points.
Oh,
I've never said that
see what
before.
you did there. I see what you did there.
I think that's an original. I don't think anyone's made that point before. Zeta, So I am new to this community. I am still learning about this company. You've been here for a minute. I really like what I am seeing. What is your kind of overall idea around Zeta?
So it has two things that I'm very bullish on from a secular standpoint. One, there's software. I think software is actually going to make its move in the next couple of years when it comes to AI, because we've seen it all basically stay in hardware and infrastructure, picks and shovels, right? I think it's finally going to start making that transition, which is probably the reason why we're starting to see a lot of these acquisition of AI companies from Meta and a lot of other subsidiaries as well, is that I do think it's going to come to software. And if I am going to be positioned for software, I want it to be positioned in companies that are very near profitability or at least already in profitability, right?
Yeah.
And I think the juice from this entire industry is not going to come from more mature software companies. I think the outperformance is going to come from companies that are at that inflection point. So if you look at Zeta from a gap perspective, they are not necessarily profitable, or like they're very close to profitability. Yeah, there you go. That's the one that Nate Dogg posted on there. Not Nate Dogg the rapper. I'm going to start calling Nate Edmond Nate Dogg. That's just
I like
just your new name.
call him that too. I like that.
Yeah, Nate. He's Nate Dogg. He's Nate Dogg now. I mean, actually, him posting about it a lot is what kind of brought it to my attention. But I saw this last October, and I was like, actually no, I think I saw Zeta like in September. People were like getting riled up, and it went to like 20 something bucks, and then pulled all the way back, or whatever. And then I didn't really look into it until October, until I saw that CNBC interview, and I was like, I gotta look into this more, right? So they basically have an AI backend or LLM, whatever you want to call it, called Athena, that runs through all the data that it gets. And Zeta gets a lot of data. Their platform gets a lot of data from all of their clients, right? Yeah, that's the most. I mean, in my opinion, though, in this industry, there really is not that much of a moat. There's just companies who have a lot of leverage with data, right? And I think it's very important as we get good further into this AI theme, is that it's not a matter of how much data you have. It's just a matter of how you're able to process that data. Yeah. And that's the reason why you saw Databricks just like its valuation get enormous versus Snowflake, which isn't as much, because Databricks was actually able to help people utilize their data in the correct form versus like, I don't know, maybe it has to do with the fact that Snowflake was public and Databricks is private. But anyways, that's going to be a very big factor. And this is actually one of the reasons why AppLovin has had a monster amount of growth lately, because they've understood how to utilize this data to get it for other applications. Now, whether AppLovin is like legitimately getting this data, I have no idea. They're obviously in some litigations about that. I think that's going to center around it for a while, but I like the advertising sector, and not in terms of walled gardens when you think of like Amazon, Google, not Google, actually Google's not a walled garden. Well, YouTube is, but anyways, not in terms of that, but in terms of companies that are helping smaller businesses and enterprises bring in more marketing. So that is my mode from the app standpoint with Zeta. I'm sorry, advertising standpoint when it comes to Zeta, but it's also my bullish thesis on it with a software perspective. So when you kind of bring both of those together, it kind of creates a pretty good opportunity. And I don't want to just be in like a stock that they're not profitable or not heading toward it. Like the valuation kind of made no sense. Like why it was trading so cheap when they're constantly beating every single quarter 16 out of 17 times.
Yeah.
And on top of that, they always raise the guidance, right? And then the previous quarter, when they reported in the end of November or beginning of November, I think it was November 4th, they actually gave really good guidance, right? And then they re-raised that guidance once they completed the Marigold acquisition.
That bar was crazy,
right?
It went from 28% to 34%.
Yeah, and it's, to me,
if we want to invest in growth stocks, like you got to find growth and abnormally high growth to get rewarded by the market.
So I actually think they're going to continue reaccelerating growth. And I think that's where the story in this comes in, right? This is certainly no Palantir. Palantir is like, when you think of AI, hardware is NVIDIA. Software is Palantir, like just without a question. It's never going to take the cake from Palantir. But I do think that Zeta provides a very good software, not just the small businesses, which is important, right? You don't want to just be focused on small businesses like Klaviyo or HubSpot or a lot of those other companies, because that can be a very volatile business to be in, because small businesses don't sign like 10-year contracts for like hundreds of millions of dollars, whatever. And Zeta doesn't have those kind of contracts yet, but they will, because they're partnered with a lot of enterprises, right? So that's very important, because enterprise contracts tend to be a lot longer and they tend to be renegotiated once they want to add a new product. So I have a pretty good understanding of how the software industry works in this perspective. So you have not only the fact that they're reflecting toward profitability, likely in the next few quarters, but you also have the fact that they're inflecting more toward enterprises versus small businesses. And on top of that, I mean, the CEO is like
You
making
like him?
appearances
I mean,
everywhere.
people have told me they think he's shady. What is your thoughts on Davidson?
So there was actually, I didn't do the research on my own. I saw a video on YouTube and I looked a little bit more into it, where it was like there was something that happened back in like I think the late 1990s or the 2000s, where he like sold a company like right before it went down or something like that. I haven't looked too much into it. I'm actually more concerned about what's happening today versus like bang on someone because of the fact that they did something a couple of decades ago. I think that's important to know the risk when it comes to
selling the company before the value goes down?
I think it was a little bit more than that. I
Okay,
forget
there's probably
exactly
more
what
to
it
that.
was. Yeah, I think there's a little bit more than that. And what's the name of that guy? Unrivaled Investing. You know that guy? He posts like some YouTube videos and stuff.
Okay, I'll check it out.
Anyways,
So
there's
what's
obviously
the what's the bear case? Why do you think the stock trades at 3 times sales?
I think it's because it's in marketing, right? Marketing is a very volatile industry. So you saw what happened last April. The stock market dropped down 20%, but like AppLovin, Reddit, Trade Desk, and all of these advertising related companies dropped down the most because it is the first budget to get cut out of all the budget. Like they're not going to cut
Good point.
AI budget. They're not going to, they're only going to cut so much headcount. Marketing. Do we need to advertise this much if we're not really hitting our numbers? Let's just drop it down a little. And advertising is expensive, right? So that's where the issue comes in. Now with Trade Desk, I think this is a bit more of a Trade Desk problem than an advertising problem. But the only problem is that they used to be the dominating demand side platform out there. And now you have other companies that are taking the cake from them. And on top of that, they can't really keep, the management is struggling here, right? You have, I keep thinking Matt Prince. I keep forgetting the name of the CEO of Trade Desk. And if you say it, I'm just going to remember it like in a second. But that's more of a Trade Desk problem. I think that this industry is, we haven't seen the full application of AI toward advertising and marketing. And I think that we're going to start seeing that secular trend in this whole industry. And I want to be a part of it, right? And I think AppLovin has already made a massive move. I'm looking for like that asymmetric comeback, which I did have AppLovin for a while and I sold it probably like $50 less where it is from here. I mean, it's probably going to keep going higher if this whole industry moves up. Same thing with Reddit.
Okay, so essentially it's a SaaS name in a volatile industry, but they have hedged the volatility with the beat and raises. That's not a perfect hedge, but it does, I think, give you a little bit of trust that the company can continue beating expectations. And if they can continue scaling at the level they're scaling at, especially with their free cash flow margins, they're very close to profitability. First party data could be more proprietary than not. That is your bull case for them. Do you see it as a $30 stock, $40 stock? How do you think of the?
I could see it as a $50 stock. I'd say if the market stays bullish, this is going to $50 in 2026. The market has to stay bullish though. Like even just the amount of gains that it eked out, like with just the performance of the market lately, like it's such a small subset. But I do think the margin of safety is pretty wide for a company like this, right? So if we look at how things were at its worst from a price standpoint, also trading above the moving averages, which is good to see on the chart. I think the bear case, if the market falls, I think this thing can go down like $15-$16, which is just where it was the other week.
Yeah.
But I do think the bull case is much wider. So if I'm risking 1 to make 6, that's a very good bet, right? So I think that's good too. And we'll see how the industry moves after that. Like, I mean, I can't really say exactly how things are going to pan out after like a year or two, but I do think the advertising sector is going to reform a lot of how people allocate their money towards marketing. But also I think they want to concentrate more on single platforms. So what Zeta offers though is not just like, hey, we could set up emails for you. But it's like they also offer a platform that lets people buy ad space for the advertisers. They're somewhat of a demand side platform. But then they also do everything else that a lot of these other companies do. And then you see companies like Klaviyo, they're basically doing what they did. And then they're also, they have a lot of products on their platform. The fact they have a platform is what helps the bull case as well. Like they don't just offer one single product. And
Agreed.
also they cater to multiple industries as well.
Agreed. Sam, last question for you. And again, you guys can follow him on Wolf Financial. He streams on their channel every day, right? 2 p.m.?
Yeah, we got about Monday through Thursday. I try to start around 2:45 and I end like around 3:45. I don't know, just a random time to end because like someone else starts shooting around that time. I don't want someone I know starts shooting around that time, and I see like everyone's going there. It's like yeah, but I like to fill that gap in. There's like a good amount of time late lunch that people have. Also like Pacific time too. Like
It's perfect.
they take the lunches around that time too. So
I love it. So you can follow them there. On semiconductor, this is another big part of your portfolio. It's a name that really didn't get respect this year. Why is this a semiconductor pick for you?
So this is a semiconductor pick because when you think of semiconductors, there's many types of chips that companies can produce, right? There's chips that they use for ASICs, which is application specific integration circuits, which can be used for like TPUs or search engines. There's general compute, which is what NVIDIA does. There's CPUs or central processing units, which is basically what's been popular for some time, and now it's no longer that anymore. But whatever, I get into that one. And then there's power chips. It's basically the chip that tells the power supply where to allocate energy or wattage to, how quickly to do it, when to tune it down, whatever. And that's kind of where ON Semiconductor comes in. In fact, there's other companies that are similar to ON Semiconductor, like Navitas or SciTime, and there's another one as well. I forgot the name of the company is, but ON Semiconductor is one of the fewest US-based power chip companies that is profitable too, right? So Navitas is a really good play in the sector. The thing is that Navitas does not have that financial portfolio that ON Semiconductor does. Maybe they will eventually. I know Navitas has those partnerships with NVIDIA, but so does ON Semiconductor. They have partnerships with a lot of the major OEM and manufacturers in the country. And on top of that, like I said, US-based, they're building a new plant in New Hampshire. They're eligible for the CHIPS Act funds, right? And on top of that, a lot of their power chips are more catered toward EVs, which needs more and more chips every single year. As new models comes out, you have more computers in there, so you need more power chips. And on top of that, you also have the AI infrastructure setup, where they have the virtual GaN technology, right? A lot of people probably heard of GaN technology, gallium nitride. Vertical GaN is like their subsidiary or their improvement on it that is going to probably start scaling in the next couple of years because they just released it this year. But I don't want to get too technical or not, but they're obviously seeing a lot of productivity, a lot of benefits from it, according to the most recent earnings call. But when you look at the EV, I think EV is going to have a major secular theme. I think we're actually in the middle of one, which is the reason why I'm seeing Tesla around $500. But you'll see Rivian come up. You'll see a lot of these other EV companies come up. It's like the market's kind of telling you that EVs are starting to come back, right? Especially as they start to bring those prices down, it makes a bit more sense to buy an EV versus buying an ICE vehicle or a gas car, right? So more EVs, more power chips, bullish for them as well. Actually, Tesla is also one of the clients, but not to the scale that SciTime is. But also the AI theme, right? Building out data centers and everything. That's where they contribute a lot for the power chips as well. And NVIDIA is one of their partners as well. So if you kind of bring these two themes together, which company is probably the most undervalued out of all of them? I've looked across multiple industries. That I have Amcor, Yumi, and StockTalk of Amcor. That's very good for the testing and packaging for a lot of these chips. And then you have TSM, which actually builds the chips. You have NVIDIA, AMD, and all these companies which design the chips. And then you also have these power chips too that need to be built in the US because you want to bring it onshoring, right? So this is like another thing that's on there. And the company is actually shrinking its revenue. In fact, I think next quarter is going to be the last quarter they're going to shrink revenue. And then they're going to inflect into the guided 10 to 12% revenue by 2027, which is a massive acceleration from negative 7%. And on top of that, they're buying back 1/3 of their market cap.
So this is a re-rating play for you. This is not like a massive growth play like traditional.
I mean, I think that, you already seen what the market does. Once Wall Street gets a sniff of something, they all just dive into it. The good part is that Wall Street never heard it. Well, they have heard of it. There's actually some forecasts on the stock, but like no one really talks about it, which is great, right? So I position myself shares wise, options wise, and I'll just let the thing grow. Where's the price target at? I think it'd go to $100 if this theme continues in the next couple of years, and I'll probably still be holding. Same thing with Amcor. It's like, you can't really put price targets on these things because like when Wall Street jumps in the bandwagon, they like continuously do it over and over. That's like saying that like, where's the price target for Palantir? It's like, who knows? Like, but all these institutions just keep buying, so it's going to keep going up as long as the bull market stays, right? But if I also look at how it's performed, it's been outperforming pretty considerably. In fact, almost all the stocks that I own right now have been outperforming pretty considerably in the last couple of months.
I think that's fair. That is very, very fair. Sam, thank you so much for joining on the final market close. Shout out to Evan with the 5 gifted. 5 of you guys just got gifted memberships from Mr. Evan. I will be seeing him at CES, and I'll probably be seeing Sam soon in a couple months for the LA meetup. You're going to be in the New York one.
Yeah, I'm going to be in the New York one. I'm going to be in the New York one in February, man.
Dude, are you coming in on that Saturday or on that Sunday?
Yeah, I already messaged Chris and everything. I'll meet up with you guys. You guys will meet up on Saturday.
Yeah, we got some plans on Saturday, so we'll meet you.
I was supposed to go to the CES, but I couldn't go. I'm going to be in Florida next month. But guess who's going to be at CES?
I think it's Stock Talk. He's going to be there.
Oh yeah, he's going to be there. But David Steinberg's going to be there. Zeta.
Yes.
In fact, him and Dan Ives on cahoots. Like, I don't know. You kind of see these things happen. It's like, maybe there's like a motive to.
You think Dan Ives is going to say that it's 4 a.m. for Zeta?
I think it's going to be one of Dan Ives. I don't think it is right now, but I think it's going to be one of the picks that he has, and he has a major influence on Wall Street. So if that happens, he's been in the Palantir game since it started, right? With you since it started. I still remember that day when he gave a $25 price target. Everyone was like, "What? No way!" No, it was funny.
That was a big deal. Now. I made a video in the park.
Big deal. Yeah, you interviewed him.
I interviewed him after, we interviewed him that week. That was because it just added some legitimacy finally to it, So I love it. Sam, thank you so much. Thank you for being an awesome friend this entire year. If you don't follow Sam, here's his Twitter, and I'm sure we'll be talking a lot more together in 2026.
All right. Happy New Year, guys. Take care.
Happy New Year. Later. All right. There we go, folks. That's it. That is the end of 2025. Absolutely freaking crazy. Again, we talked a lot about what I wrote in my article last night, but if you want to read that, I will put that here in the chat. Overall, I think we all got to be grateful for the year that we had. I'm happy that Sam brought up this point of if the market ended in November before we got the recovery, I mean, this would be a very ugly end of year. And that didn't happen. And there's a good reason that didn't happen because we got the rate cut, earnings growth was still good. There's a lot of fundamental reasons why that didn't take place. But imagine it did. And by the way, the market doesn't need a reason to recover. There is a reason, but the market is emotional and many times irrational. It doesn't need a reason. So it could have just said for no reason, hey, yeah, that was it. October was your top and it's downhill from here. And October wasn't the top, at least for the S&P, which ended up helping recover a lot of our portfolio. So I just think practicing gratitude is super, super important. From all the year-to-dates that I saw, most people are beating the S&P 500 at least by an average of 2x. And if you're right on par with the S&P 500, then there was a lot of learning that you went through this year, including all of us that did beat the S&P 500, which should be used to help us continue to beat the S&P going forward. And if you just match the S&P, it was a relatively good year. Now, if you underperform the S&P, there's some probably fundamental mistakes that were made, just like me 3 years ago making some real fundamental mistakes. And that's okay. That's part of the journey. Again, I will go back to the same argument. You do not have to be talented to be good at the markets in any sense of the imagination. You just have to be hungry and curious. I mean, that's the biggest thing I think you need, intellectual curiosity. That's it. And to be honest, most people that we know in our lives do not have that basic trait of being intellectually curious about, well, why is ChatGPT the way it is? What's powering ChatGPT? Oh, there's a company, huh? I wonder what the company's called NVIDIA. Oh, that was a gaming company. Well, what is so special about NVIDIA? And then just learning into what is NVIDIA worth? You might not even know the term market cap, but what is it worth? And then when you see that number, 4.5 trillion, you're like, wait a second, 4.5 trillion. How is it worth that much? Going down that rabbit hole and caring enough. And a lot of times you care enough because you want to increase your own financial livelihood. So there's a level of intrinsic motivation that gets you to that point. Most people don't have it. So even if you're just in the markets, you're winning, in my opinion. And I don't think you can chalk that up to be a participation award. I really, if most people participate in the markets, then yes, you get a participation award, which I think is bullshit. But most people don't. 0.1% of the planet even thinks about investing. And so I think participation awards are very serious there. And the more you participate, the better you probably get. Ian, thank you for the super chat. Admit this year I rebuilt the foundations of my life. Thanks to you, Tess, and this community. There are no words to express my gratitude. Forever grateful. Wishing you and the community the best 2026. Ian, thank you for being here, man. I know you've been watching the channel for the past couple of years. A lot of you guys have formed sub-communities inside of this community. I know Tess has created a massive community inside of this chat and probably in other group chats and stuff that you guys connect on names that you guys care about. And for Tess, her big theme for the past couple of years has been quantum. And those stocks have fundamentally changed a lot of people's lives. And so just even the intellectual curiosity of being in a group chat and reading someone's DD around quantum and then potentially thinking this is a meaningful opportunity, like that in and of itself is something most people don't do. And I'm just happy this community was a catalyst or a foundation to even get to that point. So there you go. That's what we got. That's what we got for the year. Incredible, incredible stuff. Thank you, everybody, for being here. I will see everybody tonight on Steve's channel. Let me link it right here in the chat. We'll be live at 8:30. If you are not doing anything for New Year's, get some food, get some drinks, and we will be live. And we'll be talking about markets, talking about life. I'll be live on Friday, so I'll be seeing everybody as well. I mean, it's like we're saying goodbye, but we're going to take one day off, and then we're right back at it. Like, we are right back at it on Friday. And then next week, we start off 2026. January. It still hasn't hit me yet that we are starting 2026 in a couple of days, literally a couple of hours. And for some of you guys, it's already New Year's. I mean, put in the chat if it's already New Year's. Put in the chat if it's already New Year's. I know in China, it's already New Year's. There's Steve's channel right there. What time? Time in Germany. Oh, it's very close, 45 minutes. UK, it's about an hour and a half. Time in Singapore. Singapore, it's New Year. So if you're watching at 6 a.m. in the morning in Singapore or Southeast Asia, then Happy New Year. Already New Year in Dubai. Happy New Year to people in Dubai. We'll not be streaming tomorrow, but we'll be live on Friday. 11:16 in Denmark, in Spain, 45 minutes. All right, so very soon you guys will have a new year. And then in America, it should be happening pretty soon as well. Cool stuff, man. It's been a hell of a year. It's been an absolutely crazy hell of a year. It's been one of those years, 2025. And the fun thing about the excitement of just being in the process of learning, investing, growing, seeing other perspectives is that every year there's more to learn. Every year there's more opportunities. Every year there's more ideas. Not every year is going to be a great year performance-wise, portfolio-wise, but there's so much learning. I think that there's this book, I'm forgetting the name of it, but it's a book on growth mindset. It's a book that went viral a long time ago. And I remember my mom was big on this book. I think the lady's name is Erica. But the entire concept of a growth mindset is you are more happy in life if you feel there's more learning to do. Like, the most unhappiest people are the people that don't think there's more to learn, or that there's more to understand, or that there's more to grow into. I'm trying to find the name of this book. I feel like, I'm forgetting the name of this book, but it's a very popular book. She gave a very popular TED Talk as well. And the concept is, like, if you can be a learner forever, if you can forever be learning, like, life becomes so much better. Becomes so much better. And the stock market gives you the ability every day to learn something new about the history of the market, about the performance that happened during the day, about the news articles that affected the performance of the day, about all the different new IPOs. Like, there's just a wealth of knowledge. It's a life that's very fulfilling, I think, if you're constantly learning things, which is why you see so many older people that are active and they're keeping themselves fresh and updated every single day because there's so much to learn. There's so much to update. You could go 40, 50 years and still have more things to learn about the markets. Mindset by Carol Dweck. That is it. That is it. Carol Dweck, Mindset. And the other one that I was thinking of, these are the two. So these are the two that my mom was big on. A Mindset, The Psychology of Success by Carol S. Dweck, and then Grit, The Power of Passion and Perseverance by Angela Duckworth. The power, she has a famous TED Talk if you don't want to read the book. Erica Duckworth, or Angela Duckworth, Grit, The Power of Passion and Perseverance. And both books essentially talk about this idea of having a growth mindset. And if you can continue to have that mindset grow into 2026, I think that's a big thing for all of us. I did not know there's an arrow in the hood logo. I found out when Heisenberg or Mr. Derivatives tweeted about that. And Vlad responded to that. I actually never knew there was an arrow. Is Vlad going to give away a car for the last day? Well, we have 2 more days left of hood giveaways, right? I don't know what they're giving away today, but they gave away Super Bowl tickets. I missed the giveaway again last night. I missed it 2 days in a row. But yeah, I didn't know there was an arrow. If you look closely, that's an arrow up and to the right. So maybe I had never noticed that. Maybe that's what they wanted to do, show you an arrow going up. But yeah, that's what they got. It's a great year. It was a fun year, exciting year. Very, very grateful to this entire community for being here. Just very, very blessed to be in this position. I think there's a level of excitement that we can take this channel, brand, everything to next year. I think there's a lot more to do. I think, quite frankly, we haven't even started. Like, I really think the past couple years we set up a foundation, and now that foundation just needs a lot of momentum to build upon. And I think the beautiful thing about life is, like, everything is out of your control except one thing. Every single thing is out of your control except one thing. Siege, thank you for the $20 super chat. One thing that is in your control is your ability to drink. So yes, you can start drinking. I will start drinking at 8:30, but I'm not going to get really super drunk tonight, guys. Watch me get super drunk. But I don't know. I'll take a couple of shots, and that's pretty much it. So I'm not like, I don't know. I'm not like into super drinking tonight. But yes, if you're watching us tonight, you can start drinking. Just make sure you know how to get to the YouTube link so you can watch us. But everything in life you can't control except your work ethic. That's it. It's the only thing you can control is your work ethic. And if you can control that, which is just showing up every day, being consistent, studying, learning, yada, yada, all the things you can do, it feels like you have some control over your life. And in a world in which so many of us don't feel we have control over so many things that are happening around us, the one thing that you can, the literal only thing you can control is the amount of work you put in. And then everything else, you got to see what the byproduct of that work can become. I also think another thing that you can control is just like not being a dick, like just being a good person. I think more often than not, people think they don't have to be a good person, but you can just choose to be a good person. And so being a good person, giving more than you take, and having a strong work ethic, I think those are my philosophies of life. And I think as an investor, I try to embody those philosophies as well. And I think that's what we got to do going into 2026. That's it. That's what we got. It's crazy we live in a world where just showing up every day is enough to make you above average. Yeah. Literally just showing up, caring about the markets every day is enough to make you above average in this industry. In a lot of other industries, you got to do a lot more work to become above average. If you are just like paying attention to the markets, you are above average in this industry because 99.9% of the world does not care about what we all care about. Hopefully one day they do, but right now they don't. And that's why I think it is very special to be an investor in this time. All right, that's it. That's what we got. Thank you, everybody, for being here. I'll be live with Steve in a few hours. Again, means the world. Shout out to Cactus. Cactus, thank you for being here. Happy New Year. Wishing you all a year of clean entries, calm exits, and wow, that work type of discipline. Cactus has changed my entire productivity over the past 2 months that we've been working together. I mean, when you talk about someone who's constantly sending you updates and news and stuff that you can use to create content as you're speaking, that Warren Buffett random clip that we saw today that allowed us to segue into that came from Cactus, right? So like every single day he is there morning and afternoon, functioning as this community's Bloomberg terminal. And he was literally doing it for free in the chat for I don't know if it was a year or 6 months. And I'm so happy we formalized it. But again, he was just showing up every day doing the work. And a lot of times when you do the work and you unconditionally do it, you do it with never once did he ask for anything. He was just there every day. And your work tends to get recognized when you show up that often. And that's what allowed us to have this partnership. So it means a lot. It means a lot. And very, very happy that he is here. Steven, thank you for the super chat. Thank you, Mitt. Happy New Year. Happy New Year to all of you guys. Thank you for being here. Braden, thanks for the super chat. Half-ass efforts provides half-ass results. Happy New Year's. 1000% agree.
Let's keep it going in 2026. We got a lot of work to do. I will be here every single day, night and day, except the days where I have a bad excuse for not making it and I get yelled at. But most of the days, I will be here. We'll be covering the markets every single day. Thank you, everybody. It means the world. I'll be live with Steve in about 3 hours. The link is right here in the chat. Have a happy New Year in case I don't see you tonight. Have a great day spending it with your family, friends, loved ones tomorrow. And I will see you guys either tonight or on Friday in 2026. Thank you, everybody. Have a great one. I'll see you guys in the new year. Bye, everybody. Good night.